Everywhere. Adam Hewison here, president of INO.com and co-creator of MarketClub with your video market update for Friday, the 22nd of February. Well, God bless Meg. AIG finally makes a profit, and Abbondanza. Yes, God bless Meg. Meg Whitman has created a miracle so far with Hewlett-Packard. Yesterday's HP announcement of earnings, while profits are dramatically lower, it was still not as bad as analysts thought. We'll be looking at HP. We'll also be looking at AIG. And we'll also be looking at an ETF for a country who's going to have a big election this weekend. Yes, it's the Italian elections this weekend, and that's why we say Abbondanza. So let's get started right away. But first of all, let me just say that we want to bring your attention to this on the front page. This is very new, and this is basically where we show you how to pick out the top stocks, top penny stocks, top ETFs, and top Forex. So let's just clear that screen. Let's go right to our portfolio. And we've got a lot to cover today, so we'll move along pretty quickly, so stay with us. First of all, let's get started with the S&P 500. You can see that yesterday we had signals in both the NASDAQ and the Dow, weekly signals saying get out, but only the S&P 500 was basically stayed the same, and that's the key thing. That's why we use our trade triangles to trade with. And you should be long the S&P. The action there is still very, very positive. And longer term, we expect this market to continue to go higher, as all of our trade triangles are, if we go right here, are still very positive. Let's just go like the last 6 months and put a chart of there. You can see the action. We had a big negative down day on Wednesday. Thursday, continuation, but just missed just by a few points. 14.95 was our kickout point. We got to 14.97, and we've made a recovery. So it's not quite as bad. We may get kicked out next week. We'll see. But generally speaking, the trend is your friend, and the trend is still plus 85, and we still have our monthly and weekly trade triangles. Can't say the same thing on the S&P, the Dow. You can see there it's negative. And also on the NASDAQ, where we have a weekly red triangle, meaning you should be out of this market. This is still not looking good in our minds. So moving right along to crude oil. Crude oil just looks like it may have put in a low here. We'll have to see what happens. We talked about the Fibonacci retracement levels coming back from these levels down to about here. And if we pull this down to maybe hit the top, very, very close, just a little over the 50% level. Let's see how that shapes up. Longer term bullish, short term, intermediate term negative. So let's go on to our next market. This is gold. We put actually a poll up on our website today about gold, and I still think this has some work to do before we get out of this situation here. 1560, 1550, 58 was pretty much the low here, and 56 rather, and it looks like it's just going to chop around here. So I'd expect the type of action we're going to see here for the next several days is going to be just sort of like maybe like this, just nothing dramatic, just as it sort of tries to build a base to move higher. So let's clear that up and go to our next market. So again, this is something to look at in gold, and it's going to be a great trade one of these days, but the building blocks are not in place right now for this market to do well. Now here we are. This is the euro. The euro is under pressure today. Obviously, we have the elections this week, and in Italy. Silvio Berlusconi, who, as you may remember, is a pretty colorful character in many, many ways, scandalous in other ways. But generally speaking, he's polling very well, so he may get reelected. We will see. But we have a minus 60, which means you should be on the sidelines in this market. Mixed pictures, short-term, intermediate-term negative, longer-term still positive. So we'll have to see how that plays out. But generally speaking, we're very oversold on the downside, and you can see right here, very oversold. And if we clear that up and put a Fibonacci, and let's see how a Fibonacci fits into this scenario. Going from the very high here, 137, down to the lows, we've exceeded the 61.8% retracement, and it looks to me like you're going to see more two-way action before anything else. But it looks like a big trading range right now. That's why we have a minus 60. So best, if you're not in this market, just stand aside and let it play itself out. You don't want to be in this market before the elections. That's like rolling the dice and not knowing which way it's coming. The market's telling you, and our trade triangles are telling you, to basically be out of this market. So Moving along to Hewlett-Packard, this is HP. Look at the market action today and look at our trade triangles. This is what's so powerful about the trade triangles. What's nice about HP right now and what I love is this, and I'm going to draw this in for you. We've talked about this before, is this sort of big energy field that we have right here. And we can just sort of draw a line right across here like this. Boom, right through it. Very powerful signal, a monthly. We had a weekly. And the daily kicked in today. Everything is a plus. I think we'll see this market go higher. We can measure from the lows here, 12, to let's say the high of 17. To be conservative, that's 5. We could see HP going to 22 without too much of a problem. We're 19 to 29 right now, so another maybe $3 on the upside, maybe another $2.50 on the upside. But generally speaking, this is a great close for HP for the week, and I think that's the important thing to remember. So yeah, we are overbought, but at least the trend now is up in HP. I think Meg's done a great job. She's had a hard thing to move around. Got a lot of problems over the years. And really, HP has been going down for a number of years, not necessarily just a few months, but a number of years. If you just scope this out and we get this out to the max, you can see that really we peaked in April of 2010, and it's been downhill since then. So I think generally speaking, we are probably at or close to the lows. But the turnaround today was very good for this market. So let's go on to our next market. AIG reported a profit, and look at how AIG fell from grace, $1,400 for one share, and now at $38.29. These are the poster childs for government payouts. And if we scope this in even further, you'll see that we do have all green trade triangles, and that's a positive. So plus 70, all green trade triangles. It looks like the trend is still wants to go higher with AIG. So I definitely would not be short this market right now. I'd want to be long. If anything, I'd want to be long this market. So let's see how that plays out. Now, as I mentioned at the top of the broadcast, we have a big event this weekend. It's the elections in Italy. And how they play out is going to be anyone's guess. I mean, I think Italy's had maybe 40 prime ministers since World War II, and it's a country in chaos. One of my all-time favorite words is Abbondanza, and we mentioned this on the blog. Whether we can see more Abbondanza in Italy remains to be seen, but they've got some hard work ahead of them, and they need to get that done. So let's take a look at the ETF. Symbol is EWI, and this tracks the Italy index. And as you can see, it's been coming down. The longer-term trend based on our trade triangles, let's put a line chart. The longer-term trend based on our trade triangles is positive from 1187. However, the intermediate and short-term trend is down. It's a minus 60, very much like the euro. Remember, the euro is minus 60, meaning it's a trading range. You should be out of the market. You should not be rolling the dice to see who's going to get elected. It's just crazy in my mind to guess like that. The market's telling you, and the trade triangles are telling you, just be on the sidelines and wait for this market to decide what it wants to do. That's very important. So covered a lot of markets very quickly today. We think this is the first pullback we've seen in some of the equity markets, and I think it remains to be seen. We'll probably do a rebuilding next week in this market. But if you look at the weeklies, which is something I like to do on Friday, is let's put a chart in. You can see this, the first really after 1, 2, 3, 4, 5, 6, 7 weeks, we have a first down week in the S&P. So again, this is a first like an indicator. We may have a couple of weeks like this, we go sideways, or we may see further evidence of a weakness coming into the market. So we have to give it some time. But hey, we've covered a lot of markets, lots going on. It's a great year so far. I hope you caught our show on Wednesday. We talked about the different markets there, commodity markets. And there's also, you can follow our trade triangles. And again, going back to our homepage, just click here on the little icon, taking us back to our homepage. You'll see all of the things that we have now. Top stocks, click here. And it brings up a list of all the top stocks. So it's very cool. And you can see the signals. Look at this one, HP, top of the drawer. We actually wrote our comments before the market opened today, so this is a big sign. But when you see all the signs like that, all the yellows around here, especially when it's a weekly or a monthly, there's a monthly right down there. That's info blocks and that was a buy today. So you just click on the chart. It's very, very simple. So easy to do if you're a Market Club member. If you're not a Market Club member, you want to become one and look at these charts and the trade triangles, because they're very, very positive. There's a nice signal there in this market. Everything's a go. And you just put the weeklies in, boom, 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 boom. It's all there. So it looks very, very good. Hey, this is Adam Hewison for Market Club.